Why don't we go to the audience for a few questions? Once you give the question, I'm going to repeat it back just because it's being videotaped, and so our audience everywhere can. Bob.
Well, interestingly, the one we're looking at right now is in California. Actually, one here is in the suburbs of Las Vegas. Has been probably one of the worst markets in the country for residential in Florida. And so you need to be very selective. It's not like we went down and bought 15 different communities. We were selective, trying to figure out where the path of growth will continue to be when it gets started again in terms of new development. So looking at is Phoenix. So everything that you hear is the worst markets. We're taking the contrarian view and saying go there, buy it extremely cheap. You'll be able to produce or sell your lots back to the home developers when the market comes back at a very low basis. And it's a game of how long do you think it's going to take? Obviously, you're never building houses. You shouldn't be buying this, but we tend to think that sooner or later people will want new homes, and that product will start again.
I was just curious, how are you evaluating these plays in terms of your return expectations in your hold period?
To tell you the truth, we are looking at 10-year holds, all cash. Growth in the first 3 or 4 years, and then appreciation of some more normalized historical norms before the last run-up. So we really look at it, even in some cases, as negatives for the first couple of years, that we may have come in too early, but it was the time to strike because people were moving it. A lot of what you saw move, there were a couple different deals that were highlighted. Morgan Stanley bought a large piece of residential from, I believe it was Lennar. And they did a lot of communities. We decided to do it a little bit slower and one-off, but the public home companies, who were driven maybe less by valuation than they were by taxes, were interesting people to talk to at the end of last year.
Yes, in the back.
India is an interesting place to be doing business. Where we've been successful is we got in early on a lot of deals, and we are seeing, what could be considered in a lot of areas speculation. Depends on what you're doing, obviously, as well. Some of the things we are putting into production and actually building, office buildings and retail. Which is, I think, we're really not in the land speculation game. So the land that we bought, we are actually putting into production. Although we have been approached now by significant equity capital wishing either to buy into existing land pieces that we have or to sell them outright. And we're round tripping a couple of deals that in very short order that we frankly haven't really touched in terms of putting our business plan into place. But you have to be very careful in India. And thankfully, we've had, like I said, a team on the ground for a fairly long time who has very good contacts. We know what we want to do in terms of investing there. We don't want to get caught up in the land speculation. We are not trying to buy and flip land. We're trying to buy land, if we're buying it, to really put it into production and not have it be the game that you're just waiting for the next buyer to come along and pay a higher price.
One final question. Yes, right there.
Are you tracking any type of trends globally in terms of, for example, aging baby boomers, what they're spending on, or, for example, as a Chinese, we hear about Olympics in Beijing, World Fair in Shanghai, and World Cup in Brazil. Are you any of you tracking any of that?
Looking forward to watching them all. But in terms of those specific events, I I'm not a believer that single events like that have any influence on real estate markets other than negative. And there have been a number of studies done on that sort of topic in the sense that there's often a big overbuilding associated with an event of that nature. As it happens, Beijing is probably has the right conditions to do best out of its Olympics compared with many of the other hosts, and it tends to be the more emerging countries who benefit from the long-term infrastructure that's built associated with the Olympics. But the actual event itself doesn't create one permanent piece of long-term demand for office space. It doesn't create one permanent long-term piece of demand for retail space. It doesn't create one long-term permanent piece of demand for hotels, or you can go on. It's an event. It's wonderful in terms of the promotion of the city and so on and so forth. The same applies to World Fairs, the same applies to the World Cup and so on and so forth. In terms of the demographic trends and so on, to my mind, in terms of real estate market fundamentals, you look at two key underlying drivers for the demand for real estate. One is demographic and one is economic. And where you see the confluence of those two sort of heading in a certain direction, you've got your sweet spot. Demographic trends, the aging population is often presented as something of a negative for growth rates. Japan is the best example of that. China is rapidly going to follow it into being an aged sort of population structure. But actually what that means is not so much that the demand is reduced, less people. Yes, that's true, but it changes. And that actually creates opportunities in and of itself. So you look at opportunities for assisted living and the sort of housing for the elderly and so on and so forth. And I think those two examples, Japan, which will give the lesson in many of these things to the rest of the world because its society is aging first and fastest. And then China for the more developing world, which will be the first developing country to have an aging population and a beginning of a population decline, will be the ones that I think everybody will have to look to for those lessons. And I think there are massive opportunities to cater to those particular demand segments in those countries.
I want to thank our panel for a great discussion.